Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. As we haven't taken a look at the euro currency for a long period, today we guys take a look briefly as on the euro currencies on the Great British Pound, because these two currencies in the short-term perspective tactically looks more interesting than any other major currencies right now. Well, on the euro currency previously, when we have taken a look the last time on it, we said this market has formed nicely looking bullish engulfing pattern. It could show the tactical retracement right back up to the 50% resistance of the thrust down, because euro currency likes the 50% levels, and that's also not just the 50% fib level, but this also daily overbought and weekly pivot resistance one. Also, what is interesting is that here we have the target of this pattern, because as you know, the minimum target of the engulfing pattern equals to the length of the bars counted to the upside. And if you will count the length of the bars from this low, retracement right back down, some sort of the inner ABCD pattern, you'll see that market has achieved target with this spike up, and it has pierced this resistance area. Right now, as you can see on the yesterday's rally, market has hit the same resistance area again at the daily overbought, 50% level and a weekly pivot resistance one, and that is also the short term, the daily stretch pattern. That's bearish stretch that suggests retracement right back down. That's the tactical view on the euro currency. You should understand, guys, that currently the fundamental situation is very sophisticated on the markets, because from the one point of view we have the Fed hints, the positive fundamental data from the United States. From the other side we have the lack of the wages grow, since we still do not see any significant inflation in the United States, and that holds the Fed arm from the more aggressive policy and the hiking rate. Simultaneously, right now we see the slowdown in the overall economy growth, especially in the Europe. We see the fever of the Ebola in the world, so that's also the concern on the markets about this. That has led to the plunge on the stock market, and the investors really worry about the possible the pace of the growth in the economy and the world economy, and they worry that it will hurt the earnings of the companies that will be released within the current month. That's really big turmoil right now on the markets, and 3 weeks ago that was more clarity, and the situation was mostly positive, because that was really a good view, since the United States economy and the European economy are coming on opposite directions, and that was some really more clear situation about what should be appreciated and what should be depreciated, I mean in terms of currency. But right now the situation becomes more sophisticated, and mostly that comes from overall growth of the economy growth and the geopolitical and globe hazards that come from the different objects that really put the shadow on the perspective of the rate hike in the United States, and that in turn hurts the overall previous strategies that suggests just buying the US dollar and you will be okay. Right now this is not the issue. At least some pause has come in this direction, and currently I think that we mostly could just deal with some tactical issues that market gives us, trade them, and when the fundamental situation will become more clear, we will definitely take a look at bigger picture. At the same time, our big picture on the euro currency is still the same yet, and we do not see any significant changes in overall fundamental picture concerning the European currency. We do not see yet the reasons why it should appreciate in relation to the US dollar. So the positions of the dollar now seems still better than the positions of the euro currency. Also, guys, if you take a look at this picture, you'll see that this is some sort of the pennant pattern is forming here, or some sort of the wedge pattern is forming, right? So this is some sort of the continuation pattern after this retracement. Anyway, that's a bit too early to speak about it right now. Let's focus on this resistance, and you can see market has hit it, and today probably market could continue move lower. If we'll take a look at the forward time frame chart, you'll see first of all that's our engulfing pattern, and we said that take a look at this A, B, C bottom, D pattern has been completed here, so the target of the engulfing has been hit right at the resistance. Right now market has formed the stretch pattern. Here we see that market at minimum should reach this area. It's approximately 126.50, retest it, because this will be A, B, C top, 618 minor extension of this ABCD down, and previous trend line, so that will be the support. Potentially market could complete this ABCD pattern very close to the 618 supports, 125.85, 126.11. But if market will stop here, that could lead to appearing of the butterfly sell. So market theoretically will have chances to turn to the upside again. That's why for today's trading session, we treat this possibility of hitting 126.50 as the minimum target that market could reach, and later we will see what will happen. But that, as you could understand, that is mostly the tactical situation. That's interesting only for today's trading session, maybe today, tomorrow, but not for the longer perspective. That's our short-term view on the euro currency. On the Great British Pound, situation is developing as we have discussed yesterday. Recall that we said that we're not very fascinating with this grabber that has appeared here, mostly due to the action that we see on the intraday charts. And right now, since this is 4 sessions in a row when the trend had shifted bullish, but market shown downward action, and that indicates the bearish pressure on the markets. Besides, this is the grabber, as we said, the type of the grabber that we do not like to trade very much, because this grabber stands in the opposite direction to the previous action. So if grabber have appeared here in the downward action, that was quite another tune. But here, this grabber stands in opposite direction to the previous action, and we do not like to trade this grabber very much. As you can see, as the market grabber has appeared, we do not see any response from the price action, don't see any acceleration and so on. That tells us that this action mostly a respect of this support area and not the reversal with the brand bottom monthly trade that we expected to get. That's why, as the dynamic pressure suggests taking out of these lows, we suspect that market really could continue move lower to the 157.50 area that we have discussed previously. That really could happen till the end of the October, because this price action absolutely does not suggest the reversal. It mostly looks like the just retracement in response to the EUR sold on the daily chart and the strong support. Recall that this is monthly pivot support, 1 yearly pivot point, daily EUR sold, and weekly 160 FIB support, 50% major FIB support. That was response. Market almost has hit EUR bot, and now returning right back down. So on the forward time frame chart, you could see even better. So recall what we have discussed previously. We said that if this grabber will work, then we could get this A, B, C bottom, D pattern, and maybe this will be the starting point of the something bigger. But take a look what we have yesterday. Shy upward action, appearing of the bearish grabber that suggests the taking out of these lows, okay, and this really very curious action to the downside. Market has returned right back down below the weekly pivot point. So as you can see, this is absolutely doesn't look like the starting thrusting action to the upside, and in general this looks more as the retracement. That, guys, by the way, could lead to appearing of the butterfly here, minor butterfly. We have big butterfly that suggests the 1618 action to 157.50 as we said, but here we could get also the minor bar of line. That also will suggest the downward direction. At least currently we're starting to get more and more signs of weakness and the hints that on a possible downward direction. That is the bearish dynamic pressure on the daily. Here is the stop grabber that suggests the taking out of these lows. We do not have any action that corresponds to appearing of the grabber and this ABCD pattern. So that just confirmed what we have said yesterday, that we do not much believe this possible reversal right now, and we think that this is mostly look like the response on the support, just retracement, respect of the support, and market gradually is returning right back down. So that's why, guys, I suspect that the long position that we have taken here probably will be closed at the break even, and market really could give us another chance to take the long position, probably from some lower levels. But let's see how situation will develop, and it's really very interesting right now, the situation on the Great British Pound.